Hello students, I hope you're all hale and hearty. Now today I'm going to give you a demo session on accounting for companies. Let me first clear about today's session. There will be no sums done. Okay? For sums you have to watch my full-fledged version. Now this thing that accounting for companies is already there in your syllabus. Not only for CBSE but ISC and WB board also can follow this. Right? So it will be a theory class. It is just an introduction to company accounts, and for sums you need to watch my full-fledged version class, which will be recorded and posted very soon. So let's start. So before starting the class, you should know what are you going to learn in this demo class. First of all, we have to know the meaning of the company, because unless we know the meaning, we cannot understand anything about it after this. Next one is the sources of fund for a company. Now, for any company to run, it needs some capital. That capital will be raised by some sources. That source we have to identify for each and every type of company. Next, we are going to learn about the features of a company. Features are also known as characteristics. Now, there are different characteristics for different types of companies. Next, we are going to learn the types of companies. The types of companies are based on two bases. Those bases will be learned first, and the types under those bases will be learned next. And the last one we are going to learn today is the features of public and private companies. These two are different under different types of companies, and we have to know their features to know this type of companies better. So let's start now. Now let's start with the meaning of the company. Okay, so this first definition is given by Section 3, Subsection 1 of Companies Act 1956. It goes like this: a company means a company incorporated or registered under the Companies Act. Now, do you get anything from this? A company is a company. It means nothing, right? It means that a company is a business organization which is created and registered under the law, and that law is specified by Companies Act 1956. Now, got it? Okay. Now, let's go on a detailed definition after this. This definition is given by Chief Justice Marshall, and it clears all kinds of doubt regarding the meaning of a company. A company is a person, artificial, invisible, intangible, and existing only in the eyes of law. It means that a company cannot be touched or seen, but it is existence. It is already there in the eyes of law, right? Being a mere creation of law, it possesses only those properties which the charter of its creation confers upon it. It means that whatever the rights and duties of the members, or whatever the rules and regulations are given by Companies Act, those should be followed by a company. And this charter of creation means the Companies Act, and confers upon it means it gives the company, right, either expressly or an incidental to its very existence. That means it can be expressed directly in the Companies Act, or it can be incidental. That means we have to understand from the situation that what are these rights and duties, and what are the various rules and regulations that a company should follow under Companies Act 1956 or 2013. Okay, now let's go to the next slide. Now we have to understand where from does a company gets its capital. Without capital, no business can run, as you all know, right? So there are two sources from where it can get its funds. Number one is debt capital. It is also known as debentures. That means the company issues debentures. It is a document which is issued to the debenture holders to take loans from them. So it is also known as debt capital. It is not the owned capital of the members of the company. Next one is owned capital, and it is raised through the issue of shares. We will go into details of this afterwards. Okay, let's learn about the company first in details. Now, we are going to learn the features of the company. There are 7 features in total. We have to understand them one by one. Okay. So first feature is voluntary association. What is meant by this? It means that persons who are willing to form a company can come together voluntarily. Okay, that means there is no pressure. No one is going to tell anyone that you have to form a company or you have to work for a company, you have to give the fund to the company as a member of it. No one is going to force anyone. It is a voluntary creation. Okay, and it's an association of persons. That means only persons can create a company, right? And it is also a voluntary association to carry on a business. Remember this, it is not for any non-business purpose. So coming to the next feature, it is called separate legal entity. It means what? It is not same as its members. That means the members have a separate entity from the company itself. If we think about the company has got its own signature, its common seal, everything. And when a company deals with another company or a person, the company itself as an artificial person deals with that person. The members do not deal. The members are the representatives of the company. Members and company are two different setups, two different entities. Okay? And this entities, this separate entity concept is under the law. So it is known as separate legal entity. Next one is limited liability. Now, as you know, there are different types of companies that we are going to learn in the next slide. But still, generally joint stock company is a limited liability company. That means that liability of a member is well defined and it is limited to the shares they hold. That means if a member of a company holds 10% shares of that company, that means the total liability of the company is not on him. Only 10% of the total liability of the company will be taken by him. Okay. Now next one, perpetual succession. It means that when a company is formed, it is assumed that it will go on for a long period of time. Perpetual means unlimited. It is not for any limited period of time that it is formed. It is referred that the company will go on and on for unlimited period of time. Okay. Next one is the common seal. Common seal means that the company has got its right to sign and put a stamp on every document that the company creates or any document which is made for a company on the transaction with anyone or for dealing with anyone. Okay, so it is quite related to the separate legal entity. Next one is transferability of shares. It means that when a member holds some shares of a company, these are easily transferable to any other member or any other non-member of the company itself. Okay, so if one person holds 10% of the shares and if he does not want to continue with that 10%, he wants to sell, for example, 5% of his shares to any person he likes, then he can do that. Next one is, and this is the last one, may sue or be sued. It means that since companies are formed under law, it is under Companies Act. So this is a separate legal entity. That means it is a legal entity. Now, sue means to put a case, put a court case against or put a court case by the company. So it is obvious that the company has the right to put a court case against a person with whom it was dealing with, and it is not satisfied enough, or also the company can be sued against. That means any person who is not satisfied with the service of the company can put a court case against the company as well. Starting with the kinds of a company. Okay, so before learning anything else about the companies, we have to know how many types of companies are there, right? Now, if we are going to learn about the types of the companies, then we must know that these types are segregated according to some bases. And these bases are two. Number one base is that it is on the basis of liability of its members. And the second one is on the basis of the number of members. Okay. So what is meant by liability of members? As I already said, that this company has its own members and the members are separated by the company itself. Both have separate legal entities. And also, generally, joint stock companies are limited by its shares, and also there is limited liability for each and every member of the company. But still, on the basis of liability of members, we can segregate the different types of companies. We have to learn about that in the next slide. And on the basis of number of members, as you all know, that there can be the unlimited number of members for a public company, and for private company the number is limited. So we have to understand the different types under these categories also. First of all, we have to understand that on the basis of liability of the members, how many types of companies can be there. Okay, so there are basically three types of companies, and we are going to learn them one by one. The first type is companies limited by shares. Okay, so let me clear first of all what are this liability of the members. Liabilities of the members means that at the time of winding up, that means when the company wants to cease its operation for it wants to end its operation for any reason. Whatever may be the reason, the company wants to stop everything. The company wants to close down. Now, at the time where the company wants to close down, it will be obviously paying all the debts. It should be clearing all the debts rather towards the other parties. Now, for that, whether the members of the companies are liable to pay those debts or not, that will be decided by the types of company, right? Now, first type is companies limited by shares. Here, what is happening? At the time of incorporation or at the time of issue of shares, the members have already bought their shares. Now, they know that this type of company, whenever it is going to wind up, it is not going to ask them to pay anything to clear its debt. The company may be clearing its debt from its own assets. The members will not be asked to contribute anything at the time of winding up for this type of company. Next type is companies limited by guarantee. Now, this type of company can ask its members to pay something on behalf of it to pay the debt to the other parties. Now, this company is limited by guarantee means the members should guarantee that how much of the company's debt they are going to pay if the company wants to wind up. So this is different from companies limited by shares. In companies limited by shares, the members do not have to pay anything at the time of cessation of operation, but here the members have to pay something. And the last one is unlimited companies. It means that at the time of winding up, if the company's assets are not enough to pay its liabilities, then the liability will fall upon the members. The members will have to pay unlimited amount of money at the time of winding up if the company cannot pay its debt from its own assets. Right? Now let us move on to the second point or second basis of types of companies. The second basis is on the based on number of members. Now there are obviously two, as I've already said in last to last slides, that there are public companies and there are private companies. Now what are this? Right? We have to know it one by one. So starting with the public company. First feature of public company is that it is not a private company. Of course it is not. Next one is it has minimum capital of 5 lakhs on such higher paid up capital may be prescribed. Okay. Now the minimum capital of any public company should be 5 lakhs. And if any other rules are there under the Companies Act regarding the type of business it is involved in, then the Companies Act or any other act can impose certain restrictions on it. And those restrictions can include that the paid up capital must be this much. It can say that the paid up capital must be 10 lakhs, not 5 lakhs, right? But the general rule is, if you want to open a public company, then the minimum capital should be 5 lakhs of rupees. Next one is, it can be a private company which is a subsidiary of which is not a private company. It means what? That if a private company is opened under a public company, then that private company also becomes a public company because it is under the public company. Okay. Now this word subsidiary means if a company is under another company, it is known as subsidiary of that company. Say for example, one company is company A, another company is company B. Now B company works under A company. So A company is regarded as holding company and B company is regarded as subsidiary company. Okay, so we learn about it as we grow in learning process, but not now. For this session, it is just a company which is held by another company or which works under another company, right? Now let's start with the features of private company. First feature is that it restricts the right to transfer its shares. Now, as we have seen in the features, the transferability of shares was there for any company. And we know that these features are quite related to the joint stock companies. And joint stock companies are regarded as public companies. It is not the private company. For private company, there are certain rules which differs from the normal features of a company. Right? So number one is that it restricts the right to transfer its shares. That means once a member, always a member. The member cannot transfer its shares to another person. Okay? Next is that it limits the number of members to 50. Okay, members means what? The owners of the company. Now the number of members should be maximum of 50. It should not be more than that. But for public company, there is no limit. Next one is that it prohibits any invitation to the public to subscribe for any shares or debentures of the company. That means what? It is a very closed-knit group. That means the private company's members should be knowing each other personally. It should not invite anyone to subscribe for his shares or debentures who is not known. It cannot offer them the membership who are not known or the general public. Next one is that it prohibits any invitation or acceptance of the deposit from any person or other than its members, directors, relatives, etc. It also means that in case of shares and debentures, we have seen that it cannot be issued to anyone who is not known. In the same manner, it cannot accept deposits from any person who is not known. Who is not known means who is not a member, who is not a director, who is not any relative of any member or director. Okay, I'm very sorry that my slides are designed in such a manner that some of the things are being cut. I mean, you cannot see all the features of the private company here because you can see my face here. So I'm very sorry. If you want these notes on a PDF format, you may contact me after this. Okay. So this is the end of this demo session, and I would like you to know about our page Virtual World of Learning, and please keep learning and keep watching for full version class after this. We provide recorded as well as live sessions, and please subscribe to our YouTube channel and Facebook page for more details. And we are coming up with the more videos, and it will be a full-fledged class after this. Okay, thank you very much. Keep learning.